And just like that, within only a few years, your portfolio is 1,700,000 and you have collected over 29,330 shares. This is very impressive. Last week, I made a video reviewing all the YieldMax ETFs and we saw which ETF did great and which ETF did poorly. One of the ETFs that did great was CHPY, which is CHPY. The price of today is 59.74. And if we look at the total return with the drip, it has returned 77.8%. Total return with no drip is 67.3. And if we look at just share price return, it has returned about 31%. That's compound annual growth rate of about 40%. And dividend increase, how much it has increased its distributions, because we know some other YieldMax ETFs have been paying lower and lower. This ETF actually has increased its distributions to about 39%. So you pretty much have gained more distribution as the price goes up. So it did not decrease its distribution. So this is very good. Now, if we look at a 52-week range, is between 41.66 to 60.21. The price of today, of course, after hours is about 6.96. So this is pretty much highest it has ever been. Now, dividend forward distributions is about 43.87%. And if we look at the chart growth, you can see here it's a pretty good growth. The darker green is with drip, meaning you're reinvesting all your dividends every time you're getting them. And the lighter green is just a price without dripping. Very good. So this is just a chart and aggregate numbers for the growth of CHPY. In today's video, I'm going to show you how you can invest only $50,000 and leave it for just 10 years and you will see your portfolio growth to closer to 2 million. Again, the numbers I'm going to show you is just going to be based on the historical return that we have and historical dividend distribution they have been paying. There's no guarantee that what I'm going to show you is going to be true going forward because anything can change. So guys, if you don't want to miss any of the important update from your income and dividend ETFs, make sure you subscribe to this channel so you can always receive those updates. And don't forget to hit the belly button. Please help me by liking this video and don't forget to share with someone you think this video might help. So the first thing we're going to look here is official YieldMax website, because for some people this might be a newer ETF and this is the first time they have seen this ETF. So CHPY is YieldMax Semiconductor Portfolio Option Income ETF. And the reason why it's portfolio because it has a bunch of semiconductor stocks that it invests in. Distribution rate as of last dividend was 45.27 and return of capital when they pay last distribution was 86.94. So that means the distribution here received 86 or 87% of that came from return of capital. Overview of CHPY. The YieldMax Semiconductor Portfolio Option Income ETF, CHPY, is an actively managed exchange trade fund that seeks to generate current income and capital appreciation through investment in a portfolio of approximately 15 to 30 publicly traded companies within the semiconductor sector. The fund seeks to generate income primarily by selling options contracts on its portfolio holdings with the goal of distributing income on a weekly basis. Very important, it does pay weekly distributions because we're going to see importance of that weekly distributions. CHPY also seeks a capital appreciation through direct equity investments. So it does have some of those stocks it holds directly. So they hold them directly and they write call on them, and that's how they'll be able to generate income through synthetic options. And also they would keep some of those shares directly ownership for growth. The advisor will evaluate potential holdings based on a stock and options liquidity, price levels, and implied volatility, and regularly review the portfolio to determine whether to add or remove positions. As you can see here, is very actively. Most of these ETFs, they are actively managed, which is something good because if you're investing as something for income and also growth, you always need your ETF to be actively managed because there are different strategies that they can use to either mitigate risk and also to generate high income. investment objective for this fund or any other YieldMax fund or Round Hill or any other income ETFs, there are only major two objectives. The first one is to seek current income because you're investing for an income. And the second objective is have growth from your portfolio. Those are two objectives for any of these funds. Fund was incepted April 2nd, 2025. Ticker symbol is CHPY. It trades on New York Stock Exchange. Expense ratio, you're paying 1.03%. Talking about fee, somebody asked me in a comment, how do you pay fees and how do you calculate these fees? What I can tell you, an ETF fees actually, you don't pay, you will never see in your portfolio, this is how much they charge you. Usually is that whenever the ETF is traded, this fee is included. But of course, if you're investing in a taxable account, if you go on your statement, you will see the fees, how much they've paid, and how much your portfolio has given you in income and also capital return or return of capital and so forth. But only for people who are investing in taxable account. If you're investing in a Roth IRA or any tax sheltered account, you really don't have to worry about return of capital or any of the expense ratio. But now you know this is how much you're paying. Again, this is something that is embedded into the share price of your ETF. All right, net asset as of now is 2.10 million. NAV is 59.73. This is the price it is today. And distribution history, as you can see here, they've been paying distribution for a long time. The first time they started paying was April 21st, 2025. And the last distribution they just paid was on January 8th, 2026. Top 10 holdings of CHPY is important information to know because if you're investing in any of these ETFs, you need to know what's underlying. So this information was as of January 12, 2026, so very current. And because I'm reading this from YieldMax website, if you go to other websites, you usually can see some delays, and this is not going to be up to date. Sometimes it's not updated. But if you go to Source, which is the YieldMax official website, you will see it's usually updated on a daily or weekly. But anyways, they have a Broadcom Inc., NVIDIA Corp., Micron Technologies, Lam Research Corp., ACM Research Inc., KLA Corp., Intel Corp., Qualcomm Inc., Applied Materials Inc., Taiwan Semiconductors Manufacturing Corp. Limited. So these are the 10 major holdings, but of course they invest between 15 to 30, so they are more. But these are the major stocks that have bigger weight. As you can see here, Broadcom itself has weight of 11.32%. Over 10% of your money is going to just one of these stocks. So let's say, for example, if you invest a $100,000, then 11,000 of that will be going to just Broadcom, and 10,000 of that will be going to NVIDIA, and then Micron will take about 9,000. Lam will take about 8,000. So as you can see here, the top stocks have a bigger weight, and as it goes down, if you want to know more, you can go to YieldMax website and you can actually download all these holdings and you can see each holding that they have. So you can see they have a pretty solid stocks that they're investing under. Guys, if you don't want to miss any of these important updates, subscribe and smash the like button. So I've shown you the distribution history. What I did is I put all the distributions since they start paying weekly distributions on a spreadsheet to know what's average of their distributions. As you can see here, for example, they pay 36 cents, they pay 40 cents, they pay 35 cents, 42, 39, and last distribution, for example, they pay 50 cents. As you can see here, distributions varies from week to week. And to know the exact numbers, so we do the average and we are getting about 41 cents. That's how much they pay per week. Now, using this that I have here, from the time I took this, they have paid around 16 cents, but of course they have paid more than that overall. Now, if we look at our share price of today versus where it started, it has gained around 32 to 33%. This is just a share price without having to do any drip or any of the distributions. This is just a share price return. What I did here, I took the share price when it came out to the share price it is today, and you can see it has grown beautifully. Now we have the numbers. Now I know the current price is at 59, average distribution is at 41. Annual yield based on average distribution is at 35.69%. If you round up, it's about 36%. But on YieldMax website, if you look right now, it's going to show you the yield is around 42%. And that's because they took the highest distribution of last time they paid. But on this calculation, we are doing average distribution because this is a true yield, because of course they don't pay every time the same. So we take an average and this will be the accurate number. Asset and management have shown you so far, it has accumulated about 210 million. So it's not as huge as MSTY Ulti, but still it's a pretty good. Now I'm going to show you income projection for 2026. Again, this income projection is just based on the data that we have from YieldMax website, based on the historical return, based on the historical dividend they have paid. Anything can change, so this is not a guarantee. This will continue going forward, but we just use the data we have right now. So if you invested $10,000 as of now with the numbers that we have, you're only going to get 167 shares, and that weekly is going to get you $69. Annual income will be about $3,569. Going, the more you put, of course, your income will grow. $100,000 will get you 1,674 shares, and that's 686 per week. Nothing major, but your income is about 35,688. This again is just an income without having to consider growth of this fund. There's no growth math into this. This is just a purely distribution you're getting every week. Now, if you invest about 200,000, your income is going to be 71,000. That's quite a bit of income for a lot of people. If you get it, you can live just with this. Can you believe that? But weekly, you're only going to get 1,374. But I know for a lot of people, especially if you're retired or you're a person who have some other income and you get 71,000, that's pretty good. Now, let's say you put 300,000, you're going to get 107. Of course, you're going to pay tax from that. Let's say you pay 30%, you still have 70,000. If you put 500,000, half a million, you're going to get 178 or 3,432 per week. Huge amount of money. But of course, I won't encourage anyone to invest $500,000 in just one ETF. That would be insane. So this is just an income projection, investing and receiving a distribution as of now. But what if you want to invest now and let your money grow? Let's say you only have $50,000, because as we see here, if you invest only $50,000, you're only going to have 17,844 per year. It's not that much money for a lot of people. But you have $50,000 and you want your money grow for long term. This is the math I'm going to show you next. Leave a comment below if you invested in CHPY and what do you think about this ETF. Do you prefer CHPY or do you prefer an ETF like OT or MSTY? So as I've said, you only have $50,000 and you want to invest and let your money grow. We have $50,000 here. We have annual snapshot because we are not going to do weekly. It's going to be a long spreadsheet. And we are reinvesting our distributions or our dividend every week whenever we receive those distributions. Now, when we come to our compounding return, we can see here you have invested $50,000, you're getting $837. Your dividend reinvestment from $17,000 now, because you will invest every week, you will have $21,356 just within the first year. If you add that one to 50,000, of course, it's going to be 71,356. Huge amount of money. Year two, you are starting with the balance of 71,356. Your share would be 1,194. You reinvest all your distributions. End of the year, you would have 30,000. Your balance at that point will be over 100,000. And then you have accumulated 1,704 shares. Now, year three keeps going up. Year four, year five, year six, year seven, your portfolio would be over 600,000. But at that point, your portfolio is not $1 million portfolio yet. You just keep investing and let your money grow for only 2 more years. So from 6 years, 7, 8, and 9 years, your portfolio will turn into 1 million to 27, and you'd have 20,552 shares. And let that compound for 1 more year, your portfolio would be at 1,752,000, and you'd have 29,330. So this is how you can invest only $50,000 in CHPY, and your portfolio will turn closer to 2 million by reinvesting all your distributions. And again, these numbers, I just took the distribution you're getting, which is around 41 cents. But let's say, for example, CHPY goes down in price, the math will change. And let's say, for example, this distribution decreases, also math will change. All these calculation, guys, I just did based on the numbers that we have. There's no guarantee that this growth and this distribution will stay the same, or if YieldMax will ever keep paying. They might cut their distributions. We don't know. So if you like this content, please smash like button. Thank you very much for watching. I'll catch you next video. Bye bye.